We're watching the weekly housing market data roll in, and frankly, it keeps surprising me to the upside. Price reductions continue to fall across the country more quickly than I expected. This is the opposite of what we witnessed in the summer and fall last year. So will the housing market continue its rapid slowdown from the fourth quarter, or do these signals, the early signals of 2023, do they continue into the spring buying season and show us real buyer demand in the first and second quarter? Available inventory of homes for sale, while bigger than last year at this time, still remains remarkably low in most of the country. And the real story this week, though, is probably those price reductions, the percentage of homes with price cuts. And we'll get into that in just a second. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers right now, it might be the time to step up. Go to altosresearch.com and book a free consult with our team, because everybody's worried about what's happening in the market right now, and most people probably have a different view of the market than what the data is actually telling us. So they need you to help them see clearly. There's a link in the description below to connect with us. And just as a reminder, the video we do here looks at national data. Altos tracks every zip code in the country so that you can have your local market to your folks every week. Join us to dive in. I'm Mike Simonsen. I'm the founder of Altos Research, and here's what we know for the third week of January 2023. So let's start this week with those price reductions. The percentage of homes, single-family homes on the market with a price cut fell again this week to 34.7%. That's 1.1% fewer than just last week. It's normal for price cuts to decline in the first quarter, of course. New inventory gets listed. New listings don't cut prices until they sit around for a few months. So we also have the first of the new spring buying season happening. So turnover of some of those homes that were on the market last fall, they took price cuts and now they're taking offers. So it's normal for price cuts to decline in January. You can see at the left end of this chart, the after last fall, we have more of the market now with price cuts than any recent year. Each line here is a year, and price cuts decline in the first quarter. Then they pick up in Q2 to peak later in the year. Last year's market slowdown left us with more of the market having to cut prices than any of those recent years. Now, though, the buyer demand seems to be sufficient that homes are selling with fewer and fewer price cuts each week. And you can see that the slope of the dark red line here is pretty steep. A normal range for price cuts over the last decade is about 30 to 35% of the market at any given time. And you can see, so we're just inside that normal range now. This is showing more buyer demand than I anticipated we'd see for this month, especially since mortgage rates are still above 6%. So if you have buyers and sellers on the fence, maybe, this implies that we have more activity, more opportunity than they might be expecting. In the fall, things were scary as rates were over 7%, and that had the market frozen. The market now across the country is significantly less frozen, and it's frankly surprising me each week. You can see the resiliency in pricing and the leading indicators of pricing too. The median price of single-family homes across the country ticked up again this week to $410,000. That's just 0.25% higher than last week, just a little bit. Last year at this time, home prices were accelerating very quickly with the bidding wars and the overbidding all over the place. So even now, as home prices are climbing each week, which is normal for January, they're climbing less quickly than last year. So the year-over-year price change is compressing. But home prices in most of the country have plenty of gains that are locked in from the last few years, so home equity is very strong. And even if you assume recession hits later this year, American homeowners are in a very strong financial position, and this market is not getting weaker at this time. The median price of the newly listed homes this week also climbed. This is the time of year when we want to see how steep that new pricing is, that the price of the new listings is. That's the light colored line here. The market is now past the New Year's holiday reset, and so new listings start coming to market for the spring selling season. And this light red line here shows us everything that the sellers and the listing agents know about their local markets. They know, for example, if there are buyers, if there are shoppers at the open house, or if not, and they price each new listing accordingly. So if I know the inventory, for example, is rising rapidly in my neighborhood, then I need to price at a slight discount to make sure my home gets attention. I also know if I don't need that. So the steep incline of the light red line here at the far right end of the chart shows us that January buyer demand and price resilience are in for the next few months of home sales. That's pretty fascinating. Inventory of homes for sale was flat this week. Actually down just a few hundred homes, but let's call it unchanged. It's perfectly normal for inventory to bounce a little bit in January, but basically have found the bottom before turning up in earnest in February. The last few years, inventory kept falling into March and April even. So our inventory forecast model expects another basically flat week over week next week with inventory up or down just a little bit before the February starts to climb in earnest. If inventory were to keep falling in February, that would be a big indicator of much tighter supply and demand curve than we've been expecting. So we do expect inventory to increase in February. But we also know that home sellers are being very stingy right now. They're holding onto existing homes with ultra cheap mortgages. If they stay tight and the supply side of the supply demand curve stays low or declines, that would be another signal surprising for home price strength this year. We have 36% fewer homes on the market now than we did in early 2020, just before the pandemic. And that gap is no longer closing. So that inventory is staying very light. The supply side of the supply-demand curve is not increasing. And when I say supply is low, supply of new listings is low, this is what I mean. We had 54,000 new single-family listings across the country this week. Last year, we had 63,000 in the third week of January. Last year, of course, though, 20,000 of those went into contract immediately. So then we coupled very tight supply with very high demand. This year, we have even tighter supply, and low but rising demand. So you can see how new supply should generally keep rising until January or July 4th of the year. You can also see here how we're on this sort of new supply, low supply cycle since January 4th last year. We had that dramatic drop in new listings, a big step down, and we've never really recovered. We haven't gotten back to a normal level yet. Again, it's hard to be too worried about like big price corrections this year when the supply and demand curve don't support it. As far as demand goes, you can see that we have significantly lower demand in our pendings numbers. So we have 249,000 single-family homes in in the contract pending stage this week. That's a 1% increase from last week and the New Year's annual lows. There are 31% fewer homes in contract last year at this time, but there were 23% fewer new pendings this week than last year at this time. So this tells us demand is obviously lighter than during the frenzy last year, but we're closing that gap that opened up in the fourth quarter. In this chart, each bar is a week with the total count of homes pending contract. The light part of the bar are those newly in contract each week. So it's January, so it's just starting to grow each week. We're not going to get back to the bidding wars and the frenzy of the last few years anytime soon. But this shows us two things. One, that buyer demand has bounced off the bottom. The pendings numbers are very low, though. And so these are sales that will complete in the next few months. So those headlines, the sales headlines, are going to remain low into February and March. It's a contrast. That message is a contrast from the sort of green shoots of optimism we're seeing in the rest of the real-time data right now. But that's all the data we have time for this week. If you need to communicate about this market and about how this market is probably different from buyer and seller expectations right now, go to altosresearch.com, book the free consult with our team, learn how to interpret the crazy market data for the people who need it right now. They need you to be the expert for them. More next week.